Let me share my screen. Right, perfect. I'm gonna wait for like a minute or two so everyone can tune in. Yo, Fabio, is there any problem with the stream or no? Is it good? All right, perfect. So I just wanted to cover today's price action a little bit, and maybe at the end of the session, um, I might do some analysis for tomorrow. Maybe like do some framework, make it ready to go for tomorrow. Um, just one note though, I think on Monday it's President's Day, so I don't know if I'll trade tomorrow, but I'll be definitely tape reading. Alright, let's start. So today, first of all, it was insane. I did not watch the afternoon session, but I know pretty much what happened. Going into today, I was looking for the daily time frame initially, and I set my framework off of that. So on the left hand side, you see Nasdaq, and on the right hand side, it's ES. So I established the dealing range on the daily on both Nasdaq and ES going into today, and then I actually want to see lower prices, like maybe south side like this low. However, on the highs, we do not have a reversal confirmation just yet. And because of that, I was not focused on higher time frame context like the hourly or even 15 minute. I was more focused on the lower time frames like 5 minute or 1 minute. And after this like dealing range, like establishing this dealing range on the daily, I had my POI right there, this fair value gap overlapping this BISI overlapping with this CB, which creates a BPR, and we have it both present on ES and Nasdaq. So that was my point of interest to go short initially here. So I marked that out going into today on both assets. Then I wanted to see how it reacted there. And before market open, we go on the 15-minute chart. Actually, 5 minute would be better. Anyways, so this is the BPR level from the daily, and this one's for Nasdaq. All right. So before market open, I was watching how Nasdaq was reacting to the daily BPR level, and it was trading, back and forth, trading above and then below. But right before open, actually not before open, but like 8:30 news, it traded back down below that BPR. So that kind of set the stage for me to go or to look for short entries. But before that, obviously, I was waiting for the market to open. So before going short, I was waiting for like clues, and I was looking for some like potential targets and all that. And for the target, I was scanning all the lower time frames, like the 1 minute, 5 minute, 15 minute. But on 15 minute, I didn't see much besides these lows. But when I went down to 5 minute, I noticed something, and that's when magic happens. So on 5 minute, I saw this BC overlapping this CB. So that kind of set the stage for me right before the open. Let me change the color. That is a lower time frame BPR, like technically this specific zone, the specific area. And for the target, I was looking for some sort of market maker sell model. So I was looking for original consolidation target, which I saw right here. So I get this question a lot. A lot of people get confused about how to spot original consolidation. So I have a simple rule for that actually. If I zoom in a little bit, I basically look at the bodies of the candles, right? And I'm looking for smooth edges. So basically, this level right here, the bodies are respecting that specific level, well, from below, and then it's testing from above and respecting that. So that to me makes this consolidation an original consolidation. So what that simply means is basically this consolidation right here causes this up move, right? So from the low all the way to those bodies here is my original consolidation. I'll see. Let's do it bottom, bold. All right. So once I establish that this is my draw on liquidity, and this is the most high probability draw on liquidity in this specific time frame, right? So I mark the sell side here, mark the sell side there, and I was waiting to enter short position to target these lows. Now on the same thing on the right hand side on ES, ES also had that BPR fair value gap area, but it failed to go below these lows, which essentially created an SMT divergence and bullish SMT divergence and set the stage for the afternoon run, but I'll get there. So this is what I was looking for before open. So I know many of you are like you're aware of my content on YouTube. There's one little trick here. Before market open, before New York open, if there is a fair value gap or a BPR in this case, you do not expect a Judas swing, right? So at 9:30, I knew initially in the first place that the algorithm is not going to seek liquidity in the form of a Judas swing. So if I'm correct with the bias, if this is a market maker sell model, this fair value gap right there, or this entire zone, the BPR area, should not be violated, right? So I didn't want to see it. You don't want to see Judas swing. However, if this fair value gap was not present at the time of New York Open, yeah, maybe then I would look for this high, or I don't know, like maybe this level right there to get purged as a in the form of a Judas swing, and then maybe I'll go for look for shorts or whatever. So that set the stage. You can find entries on the 1 minute. I like to use 1 minute for entries, stop loss, and everything. And as you can see, this fair value gap was the short for the morning. It was fast, and I usually don't like to enter right away, but this was kind of like too obvious for me. Then going into afternoon. So okay, there's one important thing here which I would like to cover that. Now this move, this market maker sell model on the 5 minute, since it was delivered before silver bullet time window, 10 a.m. to 11 a.m., I was not looking for silver bullet trades, right? So whenever a market maker model is delivered before silver bullet, or after silver bullet, you would like to, you need to sit through the silver bullet time window, basically. Okay, what you need to do is you sit through that 1 hour window, then you maybe get an entry, whatever the case is, after 11 or during lunch hour, right? So I collapsed the trade there, and I just like left home, came back at 11. I was looking for what's going on. Then I saw this big SMT divergence, the bullish SMT divergence at the lows here with Nasdaq and ES. So ES did not trade into there, right? And because of that, I was looking for potential long entries. Before I consider long though, I jumped to hourly time frame on ES, and there was something beautiful here. This hourly fair value gap was respecting kind of beautifully. So once I saw that, I knew right in there, right there, I knew the target for ES will be these highs, and depends on how we trade there, this high would be a target. Now, going into afternoon or lunch, knowing all these information, I was looking for a trigger for me to go long, right? So let me go on the 1 minute time frame. I'll delete this. So essentially, if I want to go long during a pullback in a bearish order flow, I like to see some specific signatures. For example, a liquidity run, right? Run on liquidity, run on the sell side, which is essentially 22 and 2 model, right? However, that alone is not enough. I also want to see SMT divergence, bullish SMT divergence on any time frame, doesn't matter, on any time frame between assets, between Nasdaq and ES. Once it's there, then I like to identify a high probability target. So in this case, on 1 minute, there was the sell side here. It got wrecked, right? Same thing on ES. The market gave a strong reaction here, right? We have a fair value gap displacement. Same thing on ES. And on this on 1 minute time frame, after that fair value gap, this displacement, we got these lows here. So Nasdaq couldn't make a lower low. On the other hand, ES, right there, these lows made a lower low, right? That was the trigger for me to go long. So once I saw that, once this candle closed, and this point was confirmed as a swing low, I I I I was looking for long entries basically. And for the target, I was doing the same thing, trying to spot a market maker buy model in this case. So I was trying to find original consolidation, potential target, like high probability target. And the first thing that struck my eye was this area, this consolidation right there, because if I zoom in, same thing, guys, smooth edges, right? I'm looking for smooth edges. In this case, it's right about here, here, like these bodies, right there. This level is being respected and creating smooth edges on the body, like 1, 2. And there's these bodies here, going back and forth, consolidating, and this level specifically was creating smooth edges. So right there, I knew this is the original consolidation that caused the sell side purge, right? So I marked this area from the high to those bodies as my original consolidation, right? This is going to be my market maker buy model. Oops, not that. Market maker buy model target. This is my draw on liquidity, this high right there, right? This is my draw on liquidity. And then once I establish that, after this SMT, I look for the dealing range, right? Because I don't want to be from that high all the way to the lowest low. It's a short-term dealing range. So once it's there, I look at the dealing range, just because I do not want to enter a long position in a premium area, right? Once it trades above the equilibrium, the mid-level of this range, right here, and you can see how price reacting this level also. These are all predetermined, guys. Like, even before we have this low here, you can anticipate a dealing range or an implied range in this case by using these consolidations here. But I'll get there. That's more advanced stuff. I'll get there. So once you have the dealing range, like I say, if you're looking for a long, you want to be in a long position in a discount zone. In this case, this bright area is our discount zone, and I'm looking for fair value gaps, right? After this SMT, and the first fair value gap right there, a little one. So that was my first entry. And from there on until you get to equilibrium, if you wish, you can pyramid all the way to the drawn liquidity. Put that. Oops. All right. Drawn liquidity right there. Now here's the beautiful thing about market maker models, guys. Since every price move is algorithmic, every delivery is algorithmic, when you spot a market maker buy or sell model, algorithm, the algo will not reverse until the draw on liquidity hits, right? So we got this reversal here, not reversal, I'm sorry, pullback here, but draw is not tagged yet, right? So this is just to trap people or induce people to get in shorts or whatever, just to keep that in mind. Like that's why I'm using market maker models primarily, because that makes me aware of the pullbacks as well. So if you look at this range here, from there to this high, you'll see this is an equilibrium of this short-term range right there, kinda. So equilibrium, it's pulling back to give one more long entry, the last long entry for market makers to go long there. I got stopped here because my break even after pyramiding was above that level, so I just let it go. But it was a clean delivery. No matter what, it was a clean delivery. And like this run was kind of obvious because, like I said, even though we had a large down range day a couple days ago, there's no market maker model confirmed, market maker sell model rather confirmed on the daily chart, right? You gotta wait for SMT divergence first because that's gonna confirm it. If it wants to go lower, you gotta get that first, right? So it ran to the draw on liquidity, then it went to this high right there. But to become profitable, you don't have to target this high, right? You can just leave runners, or you can collapse the entire trade at the original consolidation high, which is what I like to do. So I don't like to stare at the charts the whole day. And it kept running and running. So one thing I would like to mention though, for tomorrow, let me just delete everything. Let's delete everything. Yes, sir. Of course. I was planning doing Q&A after though, but if you want to ask it away, you can ask it away. Yeah, all right. So again, on the daily, hold on. All right. On the daily, since ES is stronger right now comparing to Nasdaq. What I would like to see going into tomorrow is basically I would like to see ES purging this high, whereas Nasdaq stalling within this volume imbalance, or maybe if it's strong enough, this is a rejection block, right? Nasdaq could trade into there, so this could be a draw on liquidity, where on the other hand, ES runs the high, right? Rejects there. That will set the stage for the sell side on the daily, right? But right now, that's not confirmed, so be careful going short, right? Um, let's see. I think that's it. Fabio, you can ask it now. Yeah. Yeah, sure. That's a great question. And it's also a little tricky, right? You got to be aware of multiple time frames to be able to know exactly how further or how deep it'll retrace, right? So the retracement here happened because there's an hourly fair value gap here. Let me just pull hourly chart there, I was expecting that, but like at that point I was like, ah, whatever. If it stops me out, it stops me out. I already made my bet, right? So yeah, this fair value gap there on the hourly chart, right there, which is what it's actually reacting to. So I'm sure a lot of traders probably went short here with the structure shift. However, like I said, in market maker models, if you can spot one, it's very strong, very powerful because algo is not going to stop until it hits the draw. And for the pullbacks, what usually happens is So not it doesn't retrace all the way back to the equilibrium of the range necessarily, but what I notice is basically like this short-term range here, price usually use that, right? So if I go on the 5 minute here, let me check the 5 minute range here. Okay, so here from that low all the way to high, usually it retraces back to this EQ of that short-term range, right? And I think that's because if it was to retrace into this bigger range's equilibrium, it wouldn't be able to run, like give a strong run like that, right? That's my interpretation. That might be wrong. That's how I think about the pullbacks. So if you're in a trade, let's say you long this fair value gap like I did, right? You'll be good putting your stop loss at break even once it trades above the equilibrium of the range, right? That's what I do. Once it trades above, like this candle closes like that, my stop will be at break even no matter what. And then you can either, roll your stops or not. Depends on you. Depends on what you like to do. But if you want to do it, don't use the 1 minute chart. Rather use 5 minute or 15 minute. And what I personally like to do is, for example, in here, let's say you long this fair value gap, right? It traded into EQ. Then you use these candles. Like there is this candle, right? Down close 5 minute candle. You can use that candle as your order block, right? It shouldn't violate that. It did not violate it technically with the bodies. It traded down with the wick. It wicked down. That happens, no hard feelings there. It happens. And on a day like today, it was really like seek and destroy in the first place, especially ES was a seek and destroy. On days like seek and destroy days, you should be more, how can I say, generous with your stop loss, right? Just put it at break even, just and then let it go instead of like trailing all the way up to the draw. Does that make sense? Perfect, perfect, perfect. So I'm not sure if everyone is automatically muted. Did you check that, Fabi? Ah, okay, perfect, perfect. Let me read it through. I saw the 5 minute BPR way too late. Didn't have the daily period. So yeah, again, one more thing also. Let me go back to the morning session real quick on the 5 minute. Hold on. I believe this is very important. At least to me, it is very important. So this is the market maker sell model on the 5 minute, right? The draw is here. Now, what I like to do is the draw. Yeah, Jesus. What the heck is going on? All right, draw. So what I like to do is, because the market maker model is on the 5 minute chart, I like to stay on the 5 minute chart. So I'll keep this chart all the time, at all times, until it hits that draw on liquidity, right? So for example, on the left hand side, or on the right hand side rather, I'll have the 5 minute chart, and on the left hand side, I'll have the 1 minute chart. Where is it? Here. This is the price action. So let's say if it was not a low resistance liquidity run, but if it was, let's say, a high resistance liquidity run, it's all right. What you need to do is basically you got to be aware of the 5 minute time frame, because the market maker model is on the 5 minute time frame, right? And you can use the body closes, or I don't know, like open, high, low, and close of the 5 minute candles. So basically, what I'm trying to say is, whichever time frame is the market maker model is, stay on that time frame until it gets the draw on liquidity, right? And also you got to be able to, or you got to be mindful of intermarket price action as well. So if you were not watching ES here, if you did not spot that SMT diverges at this low after Nasdaq completed the market maker sell model, you will be holding on to your shorts, right? Now, to avoid that, obviously you got to be aware of what ES is doing also, if that makes sense. Let's see. Implied dealing range. Thor fits. Yeah. What do you mean? I need to nail the exact top, bro. Oh, we kind of did though. Look at that. We called the fucking top on NQ at all-time highs. Screen time is so important. It is very important, and the more screen time you'll have, the more things you'll get to see outside of ICT's teachings, right? Like that's how I figured quote unquote engineered liquidity, or that's how I figured quote unquote the macros, silver bullet macros, like when to trade silver bullet, when not to trade silver bullet. Those comes with screen time. Yeah, I think in terms of analysis, that is it for today. Like I say, going into tomorrow, you have this dealing range on the daily chart, right? And because if price wants to go lower and target these lows, it has to create an SMT on the daily time frame with ES. And if it does so, NQ should reject this rejection block, and ES has to run the high. Then it'll set the stage for the lows. So now I can take any questions if you guys want to ask anything. Good question. What is SMT? So SMT is basically, I'll go back in time for that. I'm going to show you a great example. Um, all right, right there. So SMT divergence is basically when one asset makes a higher high, right? And the other one fails to do so. So if you look at here, let me zoom in a little bit, these highs. So this is NASDAQ, this is ES on the right side. If you look at the highs, NASDAQ is making lower highs, whereas at the same time, ES is making a higher high, right? This is this is what we call a bearish SMT divergence, right? And for the bullish example, you've got to look at the lows, and it has to do literally the opposite, basically. Let me try to find. Okay, we have it here, I guess. Yeah. So not the best example, but it's fine, I guess. So Nasdaq is failing to make new lows, right? Whereas on, if you look at ES here, I think here, yeah, here and there, ES is making a lower low right there. Then that is what we call a bullish SMT divergence. And how you can use that info is basically that sets the stage for market maker models, right? When there is an SMT present in the marketplace, that means a market maker model is happening, is present, right? And you can spot on any time frame. It doesn't necessarily have to be on, I don't know, 1 minute, 5 minute, or 15 minute. It can be any time frame, and you can use any time frame you wish. My suggestion is whichever time frame you spot the easiest at the moment, stick to that, right? So, for example, you gotta scan through the time frames to be able to do that. So you got to go through like 1, then 5, then 15 minute, then hourly chart, right? Try to find which one is the easiest to see. What's that? I couldn't hear you. I'm not. Wait, hold on. Do you hear, Fabi? I don't hear. How I tried the SMT, or how, like today? Okay, so I don't follow your. I don't understand your question, but okay, hold on. So what are you exactly trying to ask here? Like how I trade the SMT, or how I use it? Basically, is that what you're asking? Okay, okay, hold on. So I do not trade SMT. SMT divergence is basically a signature that tells me that there is a reversal going on, which is called smart money reversal tool, right? When it's present, I know that price is gonna in this case, for example, since we have a bullish SMT divergence there, price is going to seek buy side liquidity. And where's the buy side liquidity? It's right there, right? That's what it indicates me. I don't trade SMT basically, if that makes sense. I just look for it. I try to see. So if let's say, okay, let me put it this way. If I'm bullish, right? If I want to go along, before going long, I'm waiting for SMT to be present in the market, bullish SMT divergence at the lows, right? And because of that, you have to monitor both assets simultaneously. I hope that answers your question. You're welcome. Anyone else have any questions? I'm waiting for you, Keela. Let me know if you have any questions. Otherwise, I'm going to wrap it up here. All right. I'm going to call it here, guys. Okay, 1 second. Was there a silver bullet at the AM session, in the AM session today? Um, I wouldn't say so. I mean, let me check it out. I wouldn't say so, though, because the market maker sell model was already completed, right? And it was completed before 10 a.m. So if you were to consider these fair value gaps right there, like this one and this one here, as a silver bullet short, that is not a great idea because the model is completed. It has just completed actually. So these are low probability fair value gaps, and that's how you could avoid entering in the wrong fair value gaps. Also, your fence is silver bullet. I mean, I like silver bullet the most because when I was backtesting stuff basically in FX replay, my focus was not silver bullet, but what I realized is the highest hit rate I was getting was always in between 10 a.m. to 11 a.m. or the afternoon silver bullet. That's why I stick to silver bullet the most. So if I can spot a silver bullet or let's say market maker model and get an entry in a silver bullet time window, I'll show no mercy. Like I'll go 5 contracts right in as a starter, then I'll build it up, right? Because that adds confidence and usually it'll deliver faster. And when I enter, I trust that fair value gap, silver bullet fair value gap. So I trust that. I put my stop loss if I want to kind of tighter a little bit, if it's silver bullet, and just go from there. All right, guys. So I'm gonna wrap it up here. If you don't have any questions, but before closing it up here, make sure to check out the announcement section. We're doing giveaway. I'll choose 5 people, and I'll give 1 month free access to the server. So it's just to make sure you enter it, okay? Thank you all for joining me today. Thank you for your time and being here with me. I'm so excited for this new project, and I'm also nervous, which is good. I like to be nervous, right? All right. Fabio, do you want to add anything or are you good? Amazing. Perfect. Perfect. All right, guys. Have a great night. I'll see you tomorrow. I'll probably live stream tomorrow at around 9:15, 9:30 ish. I'll be in Discord here. I'm not sure if I'll trade tomorrow, but I'll definitely tape it with you guys, and we'll see how it goes from there. Have a great night. Take care.